Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. Have we hit a bottom in the precious metals markets? Well, person you're about to hear from thinks so. He's thinking that 2013 is probably pretty stable for corn and wheat and a lot of other things as well. Ned Schmidt is with us again. Ned, how are you?
I'm doing fine. I'm just trying to, I'm glad as hot as it is, I got an inside job.
Hey, you and me both, that's for sure. And yeah, it looked like June really was capitulation. Talked to a number of people that have capitulation models, and they all agree to a man, no women involved, unfortunately, that that gold and silver as well pretty much hit bottoms, and the mining stocks seem to agree with it as well.
Yes, those last 2 weeks of June, if they look brutal from people looking at their screens, it really was brutal. I mean, we saw massive dumping of long positions, and the large speculators added 90,000 contracts on the short side. They did not want to show gold long in their portfolios when they cut June 30th financial statements for their investors. I mean, we talk about window dressing, but it was dramatic window dressing in those last 2 weeks. And on June 28th, gold hit 1186 on an intraday low. Now we're up 12%, $150 from that, and it's been a month. So just the picture of it, and you don't even have to go back and look behind it and look at the fundamentals, that it, if it wasn't capitulation, it sure looked like it. It had all the characteristics of it. And the gold stocks did the same thing. The gold stocks, I used the GDM. It hit a low on the same day, June 23rd, 8th, and it's up 24% from that low. So that was selling that pushed both the metals and the stocks way below equilibrium. So, and the snapback we've had is, in one, those people having to cover those dumb shorts, and there is still buying in. We haven't seen numbers yet for June, but in May, the volume on London clearings at the London Bullion Marketing Association were up, but the number of transactions fell. What that means is whoever was buying it were big buyers, and they were buying it in size. So in May, we know that despite the selling from the hedge funds, there were some big buyers that stepped in May and bought massive chunks of it. We obviously don't have numbers yet for June.
God, did you ever see anything like that, though? It was panic selling at its very worst.
I have seen it before, but not in gold and silver. I've seen it twice. One was the tech stocks back in 2000, and a couple of years ago in the bank stocks. The selling and the negative comments, I mean, when you read, every journalist is now an expert on gold, and they all say, clearly you need to sell it and buy tech stocks. It's close to a bottom because journalists don't know anything.
Benjamin Graham said when the boot black, which was what they called shoeshine boys at the time, when he's giving you tips on the stock market, it's time to sell. And so the shoeshine boy of today is the financial reporter, obviously, right?
That's right. And it's just reversed. When they say buy Apple at 700, it's going 1,000, not to listen to them. And when gold breaks 1,200 and they're saying it's going to, what was the target, 1090?
Mm-hmm.
You've got to get out now before it gets to 1090. It's time not to pay attention to them. Do not let journalists manage your portfolios, folks. Do not.
Yeah, well, in financial journalism, they're always so lofty, and they do wear better suits than regular journalists. You got to give them a little bit of credit for that. They go to better tailors, they fit better, and their ties generally are made from better silk and better designers. But when it comes to sensationalism, they are cut from the same cloth as your regular everyday news anchor. And they like fear, they like to fearmonger, they like to scare you, and they like to get you all agitated and nervous and, acting irrationally. That's their job. And just like the weatherman, that hurricane that's coming up the coast is headed right for your front door, so you better get the hell out of there, or else you know what's going to happen, man. They're going to be coming with body bags. That's not to say there aren't certain times you should evacuate, but not just when the weatherman tells you. You got to have corroborating evidence, and it's got to be a rational decision, not based on what some reporter tells you.
Yeah, and the other thing is, business news is actually fairly boring stuff. And the only way that they can keep an audience before the TV screen or coming back to their website, and I'm talking about generic business news networks, is by sensationalism, positive or negative. And so the more flamboyant their articles, the more people come back to their website or watch them on TV.
Yep. That's what it's all about, because, it's otherwise you're just watching a ticker tape go across a screen, and really, who wants to do that?
No, not very many people, obviously.
Yeah. So it's fascinating, and then you were talking about how, and this is pure financial engineering that you and I know a lot about, that when companies take write-offs, you're already taking the hit. Your stock price is going to get slammed. So when you take a write-off, it's called everything but the kitchen sink. You take the biggest possible write-off that you can, because your earnings are going to be super once they start rebounding. So you've already bought the bad headline. Your stock price is going to get slammed. You take the maximum possible write-off. You write off everything, even good equipment, even stuff you just bought, everything you possibly can, so that once your earnings reverse, you're going to make super earnings, and then you're really going to cash in. And you and I know when a company writes off a couple $100 million, in reality, the write-off is probably much less, but they're taking advantage of the fact that they're taking the hit. They'll over-write off, overcharge, and then when business reverses, their profits go way, way up, and they didn't have to do anything to show those bigger earnings.
Yeah, this past, in July, I think we've seen, I've lost track because it's so hard to keep, coming so fast. Almost $20 billion in write-offs in the gold industry. And stocks are actually up because the people that are long-term traders, investors, know that this is one of those cases where bad news is good news, because what it's doing is going to make earnings better in the next couple of years than they would have been if the company hadn't taken any action.
Yeah, that's an old trick, and if you're a savvy analyst, you can pick up on that, and you can really, you can clean up on that, because they all do it. It's just a part of financial engineering, for sure. And the proof is the big ones haven't cut their dividends in spite of the huge write-offs that they've taken.
I think they were pretty careful in raising their dividends because, we've already seen some adjustments of some, especially where there's on those with lots of foreign outside the United States operations. But they were so enthusiastic about reinvesting money in mines and exploration the dividend was really something they did because they had to appease investors. I mean, they weren't trying to make their stocks dividend stocks.
Mm-hmm.
So, some dividends are going to get shaved. We know that. And that, though, is normally another bad news is good news. I remember the biggest investment mistake I ever made selling a stock was the day ITT terminated its dividend. I should have bought the stock that day instead of selling it. So that was the bottom in the stock when they cut the dividend.
Because the market knew it was coming, right? The market already knew it was priced in.
I was the only person in the Western world that didn't know that.
Yeah, well, hey, we all have those stories, though, right? That's the right hazard of investing. And hey, we're going to just take a quick sponsor break here. But up next, I want to talk about what's happening in the grains and the foods, and where you think gold and silver are heading as well. And it's, all right. And it's Kerry Lutz on the Financial Survival Network, 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
And we are back on the Financial Survival Network. Kerry Lutz, 1230 WBZT. We're with Ned Schmidt, and you know him. You see him on Kitco all the time. And we're talking about precious metals. And for the we're starting to hit the season, Ned. I mean, this is the slow season, right? The summer, but we're about to hit August, right? And,
August.
Right?
August is total boredom. I mean, nothing happens between now and Labor Day. The world just stops. So, as we talked earlier, it's time to just go sit underneath a shade tree and read a book till Labor Day, and don't worry about markets a lot.
This is when the B team is taken over because the A team is on vacation, right?
That's right. They're all in the Hamptons. Wherever they go. Do they still go to the Hamptons?
Yeah, they go to the Hamptons, or they're out in St. Bart's, or they're wherever they go. Out in Europe, south of France, Spain and Marbella. Although I read an article, there's a whole bunch of squatters there now, and all those new condos that got built. Wherever they go. But usually nothing happens. But then again, if the B team doesn't do a good job papering over things, you can have disasters happen in the summer, or the blow up happens like the first week in September or towards the end of September. You never know, right?
That's correct.
Yeah. But it looks like now the trend is going to be gradually, or maybe not so gradually, heading up for the next however long.
Yeah. I would not be looking for a big gain. I mean, do not look for 1900 before Christmas. If we got to the end of the year and gold was 14 or 1500, I would be very happy, because that's reestablishing the base. We've got to bring people back into the market, and that happens with two parameters. Price is one parameter, but the other parameter is time. And it takes some time before people quit saying, when somebody mentions gold, it's going down. it takes some time for people to recognize that gold and silver are not going down, they're actually going up. So when people are looking at what the metals are going to do between now and the end of the year, remember that time often takes a lot longer than we want it to. Time can move awful slow when we want it to move fast.
Oh, yeah. Oh, yes, that's true. And then, we hit a record price a few months back in beef, and the grains were going crazy. Now it looks like things have calmed down a bit there. 2013, corn prices, everything seems to have gotten better.
Well, what's happened in 2013 to ag is that people are still focused on just one aspect. Corn is not the only grain in the world. Well, we had the drought last year, so the U.S. grain crop was dramatically reduced. We're going to have a decent crop in September, October this year. So we're getting a big recovery in U.S. corn supply. And we only get there's an asymmetrical information system in agriculture. We only get supply news. Demand news is hard to get. So the supply news has all been quantity bullish, price bearish, and they pushed December corn down below $5. Now, that's a ridiculous price, and the Chinese are telling us that. The Chinese made their 8th largest buy ever of U.S. corn in the last 2 weeks. And they're buying December corn.
Follow the Chinese money. That's what you said last time when we talked, if you remember.
There's no better value buyers in the world than the Chinese buyers. And they're saying $5 corn is ridiculous. They can buy December corn in the United States, ship it to China, cheaper than they can buy Chinese corn. That means our price is wrong. And so those things that are connected to it, prices, hog prices, those things have been dragged down short term. Next year, 2014, is a normal year. Demand, again, becomes overpowerful. And at the same time, corn is not the only thing we grow. Cotton is on my relative strength work, is number 2, put in a massive base. Rice prices have been moving up for a year and a half. We will consume, with all the bullish news on corn, we will consume this year 99.5% of the rice produced in the world. There is absolutely no surplus of rice anywhere in this world. Sugar is put in a big base. So there's other things. And farmers are going to have good cash flow this year because they're going to sell crops instead of cashing insurance checks. Next year is going to be decent for them, even if the price of corn is probably going to go back above $6 in the spring. So those people that sell stuff to farmers are going to have a good 2013. They're going to have a great spring in 2014 because they're going to sell lots of fertilizer, seed, and herbicides and pesticides. So, I told you earlier that the ag stocks have outperformed the market for the last year, and some of them still look like good. Agro, AGRO, AGCO, the tractor manufacturer, AGU, DG, and a company that's really turned itself around, ADM, Archer Daniels. Those 4 are the most attractive in the U.S. sector.
Mm-hmm. So you like them, huh? And
right.
How do you play rice and cotton in the U.S.?
Rice and cotton you play through fertilizer, pesticides, and tractors. Mm-hmm. You still have to prepare the dirt, you still have to fertilize them, and you still have to kill the pests. So mm-hmm. the basic farm business is pretty generic. I mean, they need the same stuff, maybe customized for corn or rice, but but you need a piece of farm equipment, you need some fertilizer, and you need some pesticides, whether you're raising corn, rice, or soybeans.
Right.
So it's the same universe.
Mm-hmm. So the key is that they're actually making money growing crops for a change instead of getting subsidies, huh?
Right. Only rich farmers get subsidies. The main part of the that's going away. You know, that's the whole farm bill we don't want to get into. Some of that stuff goes back to the 1920s, and it's a can of worms that nobody wishes existed today except a few people.
Yeah, there's something really twisted about that. Talk about negative incentives, to go plow your fields under and get paid for not growing stuff, and it's insanity. If you're a rich person, you get paid for raising buffalo. Yeah, it's never made any sense to me, but then again, I'm not a farmer, so not much makes sense as far as agriculture goes. And I don't know, did that make any sense to you with them splitting up the food stamp bill from the farm bill? Is that going to work in the long run? Is that going to be a good thing?
I don't think it's going to be successful, because the reason you put the food stamp into the farm bill was that brought together two groups to pass the bill.
Right.
When you separate them, the people that don't like farm programs vote against it. Those people that don't like the way the food stamp programs run vote against it. And all you do is have an argument. So
maybe that's a good thing.
Yeah, well, they keep saying this is the most do-nothing Congress in history. I love it. That's what I want Congress to do. I think they should be limited to 12 bills a year.
Yeah.
And once they pass 12 bills, they should have to go home.
Hey, what a great idea. The government that governs least is that which governs best.
Yeah,
Somebody once said that.
There's somebody smarter than a lot of people.
Yeah. Well, hey, Ned, thanks so much for coming on the Financial Survival Network. Give us your websites again and where we can get your newsletters.
My one site is the ValueViewGoldReport.com, and the food one is AgriFoodValueView.com.
All right.
And love to hear from any of your listeners.
All right. And you can always go to financialsurvivalnetwork.com. Got links to Ned's site, so don't hesitate to check us out. And like I said, Ned, it's always a pleasure. Always enjoy talking with you. Learn so much. And we will be in touch soon, so you be well.
All right. Take care.
You too. I know we've got a lot of you out there who are coffee fiends just like me. You couldn't go one day without your Java. But here's my question. Why do you drink so much marginal coffee? You know, that watery stuff you get in some places? There's another life, friends, where coffee is good, right, and true. Our friends at Tonks buy your beans directly from the growers, roast it to absolute perfection, and ship it to you within 24 hours. It's a bi-weekly subscription which sends the best beans on earth directly to your doorstep for the price of just a few cafe visits. They'd love to send you a free sample so you can see what you've been missing out on. Use the URL tonks.org/liberty. That's TONX.org/liberty. They'll send you a free sample, and I'll tell you, once you've tasted their coffee, there's no going back.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.